I want to tell you a little bit now about some massively overpriced stocks that I think are important to look at. And we're going to look at 6 stocks in here that I think are very, very subject to a decline in the market right now. And we're going to switch over to our charts. I'm going to go from this Apple chart that I have up here to the chart of the first one of the 6 that I'm going to show you is Lululemon, L-U-L-U. So here is Lululemon. Now, the 6 stocks I'm going to show you are stocks that I look through our 300 plus universe of stocks and looked for the stocks that I think are trading at exceptionally high values that just really don't make any sense for what I see here. They're very, very high PEs, and they are very overpriced. Now, note in here the 34-week moving average, and very, very often you get a decline towards that 34-week moving average as a stock corrects and gets too far. These are cycle brackets on the bottom. They help us see the rhythm in the market, and this points for about a month of decline along with what we're looking in the stock market. We're making a pretty bullish call and saying we think this stock is going to fall to about 278. That would be, about 45 points on the downside, we think, coming up in the next month. It could get all the way down here to 247 at that next support, and that is where that 34-week moving average comes in. Often you only test in very bullish conditions the 13-week moving average, but that would still take you down here to about 295. So we think the next month has a ton of risk in a very, very overpriced Lululemon. There's only so many of these yoga pants that you could sell for the people that are staying at home. This PE, forward PE at 75 is outrageous in my opinion, and we think the stock has got a decent amount of downside risk. Now we're going to move forward in stocks that are just even more outrageous here. Forward PE on Now. This is ServiceNow Incorporated. They're in cloud computing, benefiting certainly from the stay-at-home economy. Stock trading at 430. We're looking for a dip down to 370 to 350 on the downside. And here, just extraordinarily overpriced when you look at Now. And I think that the movement is going to start now to the downside. We'll take a look now at Shopify, SHOP. Remember, these stocks are stocks that I deem as very, very overbought and extremely overvalued. There were big upgrades in here to the earnings forecasts. The forward PE still at 500 plus. The stock is $1,000 stock, and next year it might earn $1.65 or $1.70. This is totally outrageous. We're going to look for a break here down to under 800, a rally probably back up, and then some decline that probably cuts this stock in a third. So Shopify, we're looking for the next month to give you a significant move to the downside, down to about 800. Next one is TWLO. This is Twlo, and here's another crazy valuation in here. The stock had no earnings. Now they're projecting in 2021 it may earn 17 cents. There's no PE, of course. These are very, very strong patterns that we have in here. You can see when the declining phases say you're going to get a correction and you get minor little down tips. Those are called swamped cycles. You have one right over here, and you could get almost no decline in here, one little downtick for a week, and then starting to move up again. This is extraordinarily overpriced. We're looking for a move in here over the next probably 6 weeks, is the way this lays out, from 270 where it is now under the 200 level. That's the way we have it projected in there. That is Twlo, amazingly overpriced. This one makes absolutely no sense to me. It's in what we call the rising minor cycle right over here. Look at the beautiful cyclical harmonics in here as the stock fell over about 6 month or year period, from 170 down to about $22. And then it jumps all the way up here to 267. Why? I mean, you got upgrades in earnings. Hopefully they'll get up to only losing $3 a share next year. This is outrageously valued in here, and we're looking for a price of below 180 in this stock. And this is a little different pattern. This points towards the end of November on here. So might dance around here in a little bit, but this is just a sick level for this stock. Crazy pricing. Makes no sense to me. And rounding out the six that I think have got a ton of risk right now is Wingstop. This has a PE of over 100 for a restaurant stock in a time when restaurants are getting clobbered. They're, maybe they have a good carry-out business, but their forward PE over 100. This is outrageous. We're looking for a decline down towards 120 here in the next month. We'll call it 4 to 6 weeks, along with what we're seeing in what we expect in the stock market. Here's your declining phase here, here, a very strong one right over here and here. So this is anomalous. It hits the target zone there and then only pulls back about 5 or 6 points on the downside. But this one right over here from 72 all the way down here to 56, so that lost 16 points right over there. You can see this one in the big crack. That fell from, lost about 60% of its value. This one from 107 down to 71, so that was about 38% of its value. So we could see in here, all we're pointing to right now is losing 20% of its value in the next 4 to 6 weeks. That's all, right? That's almost a bullish case, if you ask me. Forward PE of 100, Wingstop. Terrible valuations in here, and I think huge risk. So these stocks that I showed you, the 6 massively overpriced stocks ready for big corrections, remember, I can always be wrong, and we're wrong sometimes. But these are very, very high odds, and I look at high valuations and extreme overbought conditions. These are setups for some pretty big declines.